Welcome to another video. Today we will be focusing a little bit on the crash that happened 2 days ago, and I will talk about two technical aspects. So on the one hand, I saw many posts on X asking why did so many exchanges have degraded services or crashed, like were not available for a short time. And the other thing we'll be looking into is why the price dipped differently on different exchanges. So the first thing, in regards to how is it that exchanges sometimes during times of high usage seem to crash, especially in such critical times like 2 days ago. So if we have a quick look at that, so this is a platform I just found. It just shows the number of trades that happened on a certain date. So we don't know how exact this data is, and many exchanges obviously don't publish the data, but they seem to somehow get it. So I guess they could also have just accounts and just check the order books, but whatever. Or they could have bought the data, or I don't know, but that's not the point. The point I'm trying to make here right now is that usually an exchange, usually we don't have volatile times, right? So most of the time the exchange is at minimal usage. There are a few people, just normal trading volume. You can see here, yeah, well, about 2 million trades. So I don't know if this is cryptometer. So this is right now, this is the number of executed trades, for example, for Bitcoin. I think regarding many exchanges they're looking at here. Yes, and then they're aggregating that. But what we're looking here is that over time you can see that there's not that much happening. Like the 4th of October, 500,000 trades, 1 million trades. So right now this is only for Bitcoin. You can do it by coin. But if you look at ADA, for example, just a few trades, you can see here 824,000, so whatever. Also for XRP, so it doesn't really matter. The main point here is that you can see there's usually just this simple noise, like just a few trades, 1 million trades, and so on. And then suddenly, things nobody obviously can see, well, other than insiders, I guess, or whatever. But that suddenly there's a spike. There's a big spike, and we're going from 2 million, or at most like 2 million trades, or 3 million trades. We're suddenly spiking to 16 million trades, right? So suddenly the workload like 5x's. And that's something, obviously exchanges usually operate with certain, constraints, and obviously can on demand get more service involved. But when there's a sudden spike in activity, then obviously they can't instantly adapt to that. And this is what usually happens, why it's often a time that many exchanges have for a short time, sometimes for 2 hours, sometimes for 1 hour, sometimes even longer, which is bad, have the issue that they're not able to offer trading because they're not able to handle the workload. And this is obviously a big problem for all sides, especially for people not being able to execute trades. And as soon as this exchange comes back online again, well, who's the first one that can place orders? Well, people that use the APIs, like you can directly push to the APIs and not use the UI, so the website UI. And obviously then bots and obviously other big companies or whatever, they are able to execute faster, right? So they have an edge there. And this is like the one thing why this happens often. So we can also track it, for example, status.kraken.com. So that's where they always write what's going on here. And we can see here, like this happened on the 11th of October. So this is probably UTC time, so GMT plus 0, whatever UTC, like 1 hour earlier than my time right now. And if you look at that here in the status messages, we can see here they're investigating. So let's look at the 11th. Oh, this looks okay. No, they're just some general messages. Interestingly enough, maybe they didn't have issues during that time. But let's check the same thing on status of Binance.com. So because I'm quite certain that Binance had issues. Binance status, let's see if all exchanges usually have like a website where they show you how they're doing in the services. We can see, for example, right now we're at Binance US. So if we have a quick look there, we can see that everything is not working again. But is the past incidents? There we go. So now we can see the past incidents, but interestingly enough, they're not claiming that everything is okay here. Okay, then let's check the normal Binance, so the Binance.com website, which is separate. Status, maybe we can see it there. No, Binance, one more time. They might have also posted about it, I guess. But I've seen screenshots, many screenshots that there were issues. So right now, okay, there are withdrawal issues. But I'm just wondering if we can go back in time. So nevertheless, I'm quite certain I remember like people posting screenshots and X not being able to trade or anything. So that's what happens to many platforms. As mentioned, the volume spikes and suddenly they have the issue of having to mitigate that and go and support higher volumes. And yeah, that's the one issue. And now to the other part is why is it possible different exchanges have different prices? For example, if we have a look here at Binance, we can see, for example, that the XRP price dipped down to 1.25 US dollars, right? We're right now at the XRP USDT trading pair. And now we're at Kraken, and we can see here, well, here it dipped down only to $1.38, right? And the question is, how can this happen? And the answer is quite simple. Every exchange has their own independent order book. So right now, this is an order book, and this is completely separate from Kraken. There's not a central order book for everybody. No, every exchange has their own users and has own people that are putting limit orders in there, right? So you can see here a lot of many limit orders. And all right, so we can see, as mentioned, that there are different limit orders right now placed. So for XRP, you can see there are lots of people. They're like, if I select it here, we can see that this entire block is being summarized or like aggregated. On the right side, you can see here this message. Well, there is 34,000 XRP or 38 or whatever being bought with that at an average price of $2.38 cents. 0.8, okay, and the sum is, for example, $250,000, right? So meaning that if somebody were to come, you can also change the granularity. If, for example, go to 0.1, then you can see, well, if somebody comes and wants to sell right now 11 million, so XRP worth of 11 million US dollars, if somebody does that, the price would immediately dip down to $2. If somebody comes around, right? Puts in this case 5 million XRP on Binance, and then just sells all of those, then he's eating up all of these orders here. And then it takes a short while until somebody comes again and puts liquidity in. Obviously, there are market makers and bots there that are also going to put limit orders again in there. That's why it's then suddenly quickly going down and down, and then it jumps back up again. But they're not always limit orders there, always, all the times, only sometimes. We can see here there was a volume of, in this case, of 200 million XRP. 200 million, the volume is in USDT, my bad, sorry. Of 200 million USDT. So right now, if somebody comes along, as mentioned, and sells right now at this second 11 million USDT, so XRP worth of 11 million USDT, then suddenly the price would dip down to $2 on this exchange only. And then it just takes a short while until people obviously are gonna provide liquidity, because obviously the difference, let's imagine suddenly, well, many people are selling, there's lots of selling pressure here on Binance, and there's less selling pressure on Kraken, and people, or more like bots or like market makers, would obviously send XRP over from Kraken, which they have, over to Binance, and then obviously or not that obviously they would send USDT because they need to buy since XRP was sold. So they would buy up the sell order book, right? So they would send a USDT there, or they already have USDT, and then they can buy up again. And this is how that works. So, for example, imagine I were to buy, in this case, I were to buy on Binance, on this trading pair here, I were to buy XRP worth of 200 million US dollar. The price would immediately spike up to $3 for a short while until it's being bought up again. And this is how all of these order books works, right? So on every exchange, you've got trading pairs, and each trading pair has an order book. And the order book, the difference between the lowest sell order and the highest buy order, the difference is called the spread. And when you do a market buy order or market sell order, you are literally putting a limit order more or less in there. And if you, for example, do a market buy order, what happens in the background? It just takes the lowest sell price, for example, in this case, $2.38958 or whatever, and puts it in there. So this is how market orders work. They just buy the lowest sell order or the highest buy order. Yes. So if you sell, hopefully I didn't misspoke. I meant if you want to sell your XRP, you're selling it to the green one here, to the highest buy order. And if you're buying XRP, you're buying it from the lowest sell order, right? So obviously trying to get the best. This one with the best one here, and this one is the best, right? And the difference between those is always the spread. So meaning if I would were, for example, to buy XRP, then Sally can only sell it at that price. Meaning that there's a small percentage, in this case the spread is low, there's a small value I would already lose just by buying and selling again, right? Other than the fee. And if you look, for example, at other trading pairs, there are lots of trading pairs. So if you have a look, for example, at, let's say, I don't know, what else is there? For example, I don't know, XLM. If you look at XLM USD, you can see the spread. It's also very small. But if you look at, I don't know, like a meme coin probably, are there any? Isn't there a category like meme or something like that? Because I guess the spreads are higher on those. Because people are not trading it that much. Let's say Bonk, I guess. No, also very small spread. Okay, never mind. But the main point right now trying to make is, on the one hand, there are different separate order books for each pair on different exchanges. There's even a separate order book, obviously, for the same coin with different currencies. So meaning there is an XRP USD trading pair, XRP Euro trading pair, XRP USDC pair, and all of these are separate. And you can see the volume here. For example, if I have a look at there's also XRP BTC trading pair. I can see here, well, the spread is also very small again, but I can also trade it that way. So yes, and all of these are different trading pairs, and as soon as one of these trading pairs sells off, there might be coming in liquidity from other trading pairs. Yeah. All right, so this was the core concept in regards to those two things that happened. Also, obviously, still, especially when there's lots of leverage, this is obviously like a big issue, providing liquidity then in this critical time. If we again look at the 50-minute chart, we can see here all of this. Or let's look at the minute chart. Let's look at the minute chart. Yes, let's have a look at the minute chart then. Maybe that's more interesting to watch even, unless I'm not able to even go to the right day. Nah, doesn't look like it. Okay, so I'm navigating. Let's see. So right now, the 11th. Okay, there we go. Right. So now at the minute chart of what happened here, we can see here, just in a few minutes, all of this happened, right? We can see 1 minute, and then there's already this. All of this happened just whatever, like 1, 2, 3 minutes, 4 minutes. So in 4 minutes, all of this happened, right? So this is yeah, crazy. And then obviously it was bought up again within a short time. Then obviously the buying volume came in again. But yet obviously this is yeah, interesting or very bad, especially when there's a lot of leverage and people yeah, obviously losing so what was it? If just fingers saw like what was it, 20 billion in liquidated shorts, I think. Well, let's see, what is it? I think it's called Glass. Let's see, Rec 24 hours. I think that's the website. Yeah, in CoinGlass. Yeah, almost there. So if we again have a look, like this is just a website where we can see how much people were wrecked, like in the last so over the last time. But maybe we can even select the day. Doesn't look like it. It's just okay. It's just maybe we can see it here. Yeah, probably. And this is, yeah, all of the longs that get liquidated, but this doesn't look that much though. Yeah, but nevertheless, yeah, this is just what I wanted to mention in regards to those two things. So why do exchanges go down in these critical times? And the answer is just an insane volume spike. And obviously these exchanges don't always operate at the capacity that is not needed, and then they can just, you know, when the issue when there's more volume, then they can just spawn in or create more server instances that handle requests. But yeah, when they don't see it coming, then they're not able to do that. And the other thing is obviously there's some I guess debate that's going on in regards to all of these hardcore spikes, because obviously this is like the liquidation event where yeah, all of the futures get destroyed more or less. How much responsibility an exchange has, I guess, to provide liquidity. I don't know how to phrase it better right now, because I guess this is somewhat a debate since it destroys everything, even though it didn't dip that low. But I don't know, like it obviously don't do future trading. It's more or less gambling. At least that's what I hear from most people. but obviously, yeah, lots of people lost a lot of money. And yeah, thank you for watching and see you in the next video.